Good morning, traders. It's Monday, February the 4th. Taking a look at the charts, we've got the SP 500. As you can see here, there's two charts. The one on the left is our 30-minute chart showing when the market gets dipped down into short-term oversold, this lime green area. When the bars are green, we know the trend is up on a technical standpoint. When it's red, we know the bars are down. So that's how we kind of identify the short-term technical trend. Overall, the market today set to open fairly flat on the market. We do have an upward bias today for stocks, so maybe we'll see it continue to go up and push to some highs. Overall, the overall markets or the overseas markets last night traded lower, so we could see this more or less be kind of a somewhat dull session at this point. If we look at the daily chart here, we've had a nice pop in price. It's consolidating. Little tight bull flag. The 5-day moving average is stepping up. So we're probably going to open somewhere just at or above the 5-day today. And usually we should find, if this high momentum play is in place, we should find support and we could easily continue to grind our way higher. Nice trajectory going to the upside, and we could continue to see that going forward. Now currently we are long Roku. We're seeing it continue to push up. We are looking for a pop to the 51 area, which if we draw on the chart here, 51 is just about where this gap window fill is. It's also more or less a Fibonacci extension from the low to the high to this low. Gives a first projected target of 51. More or less, the overall stock market is, as long as it can hold up above the 5-day, we should see this pop and squeeze up into here. If we do get a nice move in the next day or two, we may pull off some of our money and move our stop up to break even. I am a little worried that the equities market will pull back a little further simply because we are getting a little far from the 20-day moving average. If we do have a pop in the SP 500, we'll see the rest of the stocks pop. And usually we'll see it pull back. It'll push us into an overbought territory on the index, which last time we hit one was back over here, which is where we saw the market pull back fairly quickly. So I think we're close to that. We're going to get a pop. We're up into this. We're getting right into the heart of this consolidation. So another squeeze up here to the upper end of this range, I think could give us a big red bar down on the SP 500, and we could see it consolidate a little bit more. Let's take a look over at the chart of bonds. Bonds down 0.25% this morning. Money is flowing into the safe haven plays and out of bonds. It's fading back down. Overall, we do expect, we talked about this a while ago, we do expect more or less bonds, oops, wrong tool. Do expect bonds to continue to more or less hold up, to trade sideways in some type of a range like this and kind of fizzle out of favor for a little while until we see the overall equities market potentially start to show signs of a reversal. I do feel as though there's another big leg up in the bond market, but that still might not be for another month or three. I think there's quite a bit of time for bonds to consolidate and for the stock market to kind of gyrate and kind of work its way higher. It might have some corrections along the way, but it'll continue to grind and overall slowly inch its way higher over the next few months while bonds pull back or trade sideways. If we take a look over at, let's pull up Bitcoin real quick. Bitcoin's still in a bearish formation. It started to form a reversal pattern, never did break out. Instead of it popping here, it actually broke down. It traded sideways, broke down, traded sideways, broke down, traded sideways. Looks like it's still in this never-ending kind of bleed out, which is what we want to see. We want to see this fizzle out and just kind of work itself and eventually kind of have a little bit of a hook near the end. The longer this can kind of drag out before we get this kind of last minute kind of everyone gives up and sells the position, that could be a very key opportunity for Bitcoin, and we need to see it break this level probably fairly substantially still. So I still think there's more downside in Bitcoin. If we take a look over at the dollar, US dollar today is relatively flat. Overall, let's just zoom out here. We do have a downward bias for the dollar today. If we zoom back in time here, you can still see we're making a series of higher lows and higher highs. We've got a low, and then we got another standout low. So far, we got another standout low. So we're having higher lows. We've got higher highs in the market. So it is still working its way up, but it is on the verge here of potentially starting to break down. If it starts to break down, that's when we're going to see commodities, precious metals really start to take off. But at this point, we could very very much so. See still this channel higher and continue to move up with the dollar index potentially reaching 99, 100, which is somewhere up in this range on the index dollar chart. So that would put some pressure on precious metals over the next month or two, which is a pretty good possibility. Our ADL system is saying we should see precious metals fall out of favor or at least become really volatile for the next 45 days to 60 days, and that could be with the dollar moving up. Taking a look over at gold itself today, gold down 0.5%. Let's just zoom in on the gold chart here. Gold moving down to the 5-day. This is the first level of support. We'll see if it can find some support here. It is in a high momentum play. It should find support if the high momentum here is still in action. If it breaks down through this level, then we could very much so see it really pick up speed and move all the way back down to this 1300, probably pierce through it a little bit and chop around. If we look at silver, it's down 1.1% this morning, more or less a little steeper of a correction. Obviously, it's already almost down to the 20-day moving average this morning, but silver is much more volatile. It kind of chops around through the moving averages and a little tougher to trade, moves more on a percentage basis. Looking at gold miners, we closed out that position last week. It's had a very strong run, several weeks to the upside, couple weeks, and more or less, it's getting a little bit overbought. We are expecting weakness in the market. Let's just zoom out here on the daily chart. You can see where we are. More or less, if we were to throw a horizontal line across here, you can see where we're trading. We're trading right through the heart of this consolidation. We had this big price spike up here, or we're kind of right through all these previous pivot highs, previous pivot lows. It traded through this area, so we're getting into this level here where we could very much see a very sharp pullback in the market. More or less, we're getting a similar setup to what we saw over here. You get these strong pops into price action, chops around, gets volatile for a bit, and then we see a pullback. And I think we could see one of these pullbacks come back into play here in the market and could give us an opportunity to potentially get long again. If we draw a support trend line on here, we can get a quick feel for where support should be, depending how quick it pulls back. Maybe over at the 31 area, could be higher. We'll see how this reacts over the next little bit. But overall, it's got a lot of highs here to work through around this 34. For all we know, we could get some blow-off action where we see huge volatility and it could go higher. But overall, I still feel as though eventually it's going to pull back down to this support trend line, find some type of support across this area here before really moving higher. So I think we've had a nice move. We did get long down around the 27 something range right down here. We've had a nice move up, and it's time to wait for the market to consolidate. It's overextended, and reload when it's potentially consolidated for several weeks and ready for another launch pad to the upside. Looking at energies, natural gas down 2% this morning, continuing to fizzle out. We're getting down into this level here that we've been talking about for a while. We really wanted to see it break the 280 or 270 area, which are these pivot lows over here, and this one over here. This morning we are gapping down and we're breaking this 270, so we're starting to see a flush out of price action, and we'll see if we get some type of huge red down bar in natural gas, followed by potentially a reversal. I do feel as though it's getting very overdone. If we go to the weekly chart, let's get a good visual of where we are. We've got a huge pattern here, big support down here around this 260 area. So we're only like 10 to 7 cents away from a very significant support level, and I think it could be a good opportunity to get long with natural gas for at least a technical bounce. When you come down to a major level like this and you hit it for the first time, you can get a very strong bounce off this level. This is a weekly chart, so obviously it's not a one-day bounce. You can see this big time pattern. Came down, hit it, traded sideways for 1 week, and then took off. Same thing over here. Came down. You could argue here it tagged it maybe twice before popping, but came down, tagged it once, and popped. Tagged it here, traded sideways for 1 week, and then took off. And over here worked its way up. So we're getting back down to another one of these key levels long-term for natural gas to go from an overbought explosive move to an oversold, kind of over-exaggerated move to the downside. And I think we could get a nice move out of here. Looking at crude oil, down 1.2% this morning. This is the weekly chart. You can see our support and resistance lines on here. They go all the way back to gap windows back here, key previous pivot highs and pivot lows. If we zoom into the chart, You can see we came up to it last week, had a very strong close around this 55, which is a pretty key resistance area. This week, so far, we're pulling back. We'll see what kind of price action unfolds. But overall, if that dollar moves higher and if price can't hold at this level and we break the 5-day, we're probably coming back down to the 50, potentially flush down to the 46 before it potentially starts to go back up. And you could argue it might be some type of head and shoulders forming with a neckline across the chart, potentially for a rally later in another couple or few weeks from now. Anyways, that's it for this morning. Talk to you in a little bit. Bye-bye.